In this video, we're going to speak a little more about the targets that we see on our charts. Targets are one of the most important features of the Sentient FLD indicator because they provide us with information that is only available to us as Hurst Cycles traders. So let's speak a little more about these targets and in particular what it means when they are reached and what it means when they are not reached, because not every single target is achieved and it provides us with useful and important information when it is not. So I'm going to start rather arbitrarily on this 15-minute chart. First of all, you will notice a 12-hour cycle target was achieved over here, and then a one-day cycle target was achieved. And price then exceeded those targets. In other words, it went higher. What that means is that there is an excess of bullishness in the market. In other words, there is more bullish impetus present in the market than would be purely provided by those cycles. It's an interesting thing to consider. We don't really know what these cycles are, but they are obviously influencing price movement. And so when a cycle target is achieved and then exceeded, whether it's to the upside or to the downside, that simply indicates that there is more energy in the market than would purely be provided by those cycles. And you're going to see it happening quite a lot of the time. Now let's consider these cycles to the downside. We had a 6-hour cycle target to the downside, which was achieved over here, and then price kept moving. Why was that? It was because it was heading down into a one-day cycle trough. And so when you're heading down into a one-day cycle trough, you would expect that extra bearish pressure as the 12-hour and the one-day cycle are pushing downwards. And indeed, you can see that the 12-hour cycle target was in fact achieved over here. So this is a fairly typical situation as price moves down from this peak. And we're looking here at the span of a one-day cycle. This is a one-day cycle that reaches from the left-hand edge of the chart to this stack of diamonds over here. That's a one-day cycle. And so as price dropped down from the second peak, this is the first peak over here, and this is the second peak over here. As price dropped down from that second peak, it first of all achieved the 6-hour cycle target, but then it is expected to continue lower, and it also achieved the 12-hour cycle target. What about the one-day cycle target? Where is that? Let's compress our chart a little and find it. And here you can find that one-day cycle target. Notice, of course, the cluster of targets that we get here. I've drawn over them, but you can see there's a one-day cycle target from the 30-minute chart and from the 1-hour chart, and also from this chart, our 15-minute chart. And so all of those one-day cycle targets are clustered at this level over here. Remember not to pay too much attention to the time position of the multi-time frame targets, but the price levels are of course very important. And so this target was over here. That is an example of a target that was not reached. And this is where the interaction between the targets and the analysis becomes so useful. We have a one-day cycle trough that has been found in the analysis. Remember, there is never 100% certainty, but it is very likely that that one-day cycle trough has formed, and yet it formed above the target for the one-day cycle. What does that tell us? Well, because it was a downside target, in other words, price was moving down towards it, and the fact that it was not achieved indicates that there was not adequate bearish pressure to bring price down into that one-day cycle target. That therefore indicates that there is some bullishness in this market. If price had achieved the one-day cycle target and extended lower, that would have indicated an excess of bearishness. So when we see a one-day cycle trough forming, and it is forming at a level above the one-day cycle target, that provides us with useful information. We know there is a little bit more bullishness in this market than we might otherwise expect, meaning that it might be useful for us to enter into some long trades as price bounces out of this one-day cycle trough. Let's take a look at some other time frames, and this is the 1 hour time frame that we have over here. Notice this 5-day and 2-day cycle target that has been achieved, or there are two targets that are achieved there, 2-day and 5-day cycle targets that are achieved on this bar over here. We discussed this particular situation in the video in which we looked at the diamond notation. We were expecting, in terms of timing, the 5-day cycle trough to form over here, in other words, at this time. In terms of price level, we were expecting it at, of course, the level of that target over there. When that target was achieved, we needed to consider the possibility that the trough was now in the process of forming. And indeed, the trough did form on that very bar according to the shorter time frame analyses. Notice here the very accurate fulfillment or achievement of the 1-day cycle target up at the top end over there. As a matter of interest, that's something that you are going to see very often on these intraday charts because of the fact that the shorter cycle targets need to be achieved often within a single trading session. And so the traders, the big traders, will be running markets up to achieve those targets before they call it a day and go home. Here is a 4-hour chart, and here again we see a 20-day cycle target that was achieved over here at this point. Price dropped a little lower and then formed this 80-day cycle trough over here. Now, in a perfectly balanced situation, we would expect to see price achieve a 20-day target, then a 40-day target, and then achieve the 80-day target as the 80-day cycle trough is achieved. However, there is very rarely an entirely balanced situation present in the market. Why is that? It's because of the longer cycles at work. So let's quickly step up to the daily chart and consider why it is that the 20-day cycle target was achieved, but not the 80-day cycle target at the 80-day cycle trough. And here I have zoomed in on the daily chart just to consider this particular situation. Here is that 80-day cycle trough. Remember, we have different colors because of the different cycles that are our primary cycles on each time frame. Here are the targets of the 20-day and the 40-day cycle on the daily chart, and I have discussed in previous videos why it is that these targets are slightly displaced on the different time frames, particularly when you make the move to the daily chart, because of the fact that there are no weekends on this daily chart. So your targets on your daily chart will be a little more displaced compared to the other time frames than when comparing the hourly time frame and the 15-minute time frame, for instance. But where is that 80-day cycle target? Here it is over here, and I'm not actually plotting the 80-day FLD that far into the past, so we can't really see it. But in fact, this target is only now being plotted because price is just now threatening to cross down below that 80-day cycle FLD. So again, why didn't price reach an 80-day cycle target? First of all, there is not always an 80-day cycle target available at the time that the 80-day cycle trough forms. But the more accurate answer to that question is because of the influence of the longer cycles, something that we call underlying trend. And in this particular case, you can see if we zoom out, the reason for that is because this is a 40-week cycle target according to this analysis. Here is the M shape for this 80-day cycle. It is, of course, a very bullish M shape. This is a bullish cycle. And that finally provides the answer that I was hinting at earlier. When price moves down to a particular cycle trough, it might not check all the boxes of all the targets for all the cycles on its way down to that cycle trough because of the influence of the longer cycles, which in this case were making this a particularly bullish cycle. And so when the market is forming the final trough of a bullish cycle, it might not reach all the way down to that particular cycle's target. On the other hand, when it is forming a bearish cycle trough, in other words, the trough that ends a bearish cycle, so it would have the reverse shape, it would be slanting to the downside, then often price will achieve targets for even longer cycles on its way down to forming the smaller cycle trough. I hope that makes sense. The important lesson and the message that I'm hoping to convey in this video is that these targets provide us with very valuable information. They are not just price levels that we can trade towards. They provide us with important information about the state of the market. Is it more bullish than expected? Is it less bullish than expected? Or is the market working like clockwork and ticking all the boxes as it checks those targets on its way down to a particular cycle trough? One final comment to make while we're looking at this chart. I can't resist pointing these things out. Here, price bounced out of a 40-week cycle trough, of course. That was in October of 2023. Here is a cluster of longer time frame targets from the weekly chart and the monthly chart for the 80-day and 20-week cycle targets. Notice how those targets pretty much mark the end of that first move upwards. And that is something that you will often find. Price will achieve those targets, sometimes reach up to fulfill the targets on the longer time frames of the same cycles. And then we go through a period of time where the market gets its breath, if you like. In this case, it was coming back down into this 40-day cycle trough over there. But having achieved those targets, it lost its upward impetus. The fact that it lost its upward impetus at that moment indicated that there was not actually that much additional bullish pressure present in the market, which was an interesting piece of information for us, because as cycle analysts we're constantly trying to gauge how much bullishness or bearishness is there in this market. Do we have an excess or do we have an inadequacy of bullishness in the market? And that is really what these targets help us to determine.